President Trump lands a trio of trade deals worth billions, opening new markets and drawing record foreign investment. So could this be the boost the U.S. economy needs as pressure mounts on the Fed to cut rates? I'm Veronica Dudo. Let's find out.
This is In America Today from the Ticker News Studios in New York City.
President Trump is celebrating a string of new trade victories, locking in major deals with Japan, Indonesia, and the Philippines. The agreement with Japan alone includes $550 billion pledged in U.S. investments and unprecedented access for American cars, trucks, rice, and agricultural goods. These deals are being framed as a major win for American workers and a turning point for U.S. manufacturing and exports. At the same time, the administration is pushing the Federal Reserve to lower interest rates as tariff revenues surge and the economy continues to expand. Here's President Trump speaking about the new deal with Japan.
Just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. And that was done with Japan. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. But we're doing really well as a country. We're strong. We have a lot of money flowing in. The tariffs are kicked in better than anybody other than me and a few of the people in the room thought could happen, Howard and Scott. And I just want to thank you. You've been unbelievable allies, because you're really allies. That's what you've been, and we appreciate it. Some were very difficult, but you got there. And some were a little bit, they had a little confidence, and they came in early, and we just appreciate everything.
For more, I'm joined by Michael Bustler, an economist, policy analyst, and professor of finance at Stockton University. Welcome to the show.
Hi, Veronica. Thanks for having me. It's my pleasure to be here.
So first, let's begin with how significant are these trade deals for the U.S. economy in both the short and long term?
These are very significant. When you look at Trump's tariff policy, what happened is when he got into office, he looked at every trade deal we had with virtually every country, and they were all slanted in their favor and to the detriment of the U.S. U.S. charged typically 2.5% tariffs on things imported into the U.S., yet when we tried to sell goods to those countries, they charged 20, 30, 40. India was charging 100% tariff. So what that meant was we bought a lot of foreign goods, and foreign countries bought very little of ours because they were so expensive as a result of the tariffs and the quotas and regulations. So what Trump said is, what I want to see now is reciprocal tariffs. Whatever we charge, we want you to charge. And he's come up with deals. England, it was a 10% tariff both ways. Japan, it was a 15% tariff. The real significance of all of these tariff deals is it will open foreign markets to U.S. producers. Because of those high tariffs, we couldn't sell anything in most of those countries. Now we'll be able to sell our goods. This will benefit primarily a lot of industries, but the agricultural industry. The U.S. is extremely efficient at producing food, and we like to be able to sell it to the rest of the world. Japan, for instance, has a shortage of rice, yet they wouldn't let U.S. produced rice enter the country. Now they will. So these deals open up foreign markets. It will add tremendous growth to the U.S. economy, along with some of Trump's other policies. And let me say something about the $550 billion. They've pledged, Japan that is, has pledged to spend that in the U.S. at Trump's discretion. So if he decides there's certain projects that need financing, he can tap into that for some of those that financing, even if it's for some public projects. This is the start of all of these trade deals. He's got about 4 or 5 of them now through. Eventually, all countries are going to have to come to the table and come up with a deal that will benefit the U.S., mostly by opening foreign markets to U.S. producers.
Now, of course, we did listen to the president, and he mentioned that there could be a deal potentially close with China. But on the flip side, we're seeing a lot of pushback from the European Union. Where do you think that goes?
So the European Union is a tough deal to make. There's 27 countries, I think, and each one has certain particular needs. So when these deals are put together, they put a tariff on just about all products, but there are exceptions. For instance, the U.S. says there are some products that are vital to our national security: steel, aluminum, copper, medical supplies. So we're going to put much higher tariffs on those. And then that should shift production to the U.S. So every one of these countries has certain industries that they want to protect. So because there's so many countries in the European Union and each one has different industries they want to protect, the European Union deal will be very difficult. Not impossible, but difficult and a little more time consuming than with some of the others. It will benefit the European Union to make these deals because a large segment of their production is sold in the US and they don't want to lose that. And if they don't come up with a deal that's reasonable and acceptable by Trump, he's going to put very high tariffs on their products and that will clobber their economy. They've got to come up with a deal, as complex as it may be. They have to come up with a deal.
Now, of course, people who work in finance or study it, we oftentimes see them on opposite ends of the spectrum in terms of debates, understanding if we put certain policies in effect, what actually would happen. And so when we heard President Trump coming in for his second term and he talked about reciprocal tariffs to a lot of people on Main Street, that sounds somewhat fair. But of course, we heard from the mainstream media, politicians and economists talking about how the American people will really pay. Do we know yet what's going to happen or where that stands? Or could you expand a little bit on his idea?
So some of the fear, and Jerome Powell also has this fear, which is why he's not reducing interest rates, although he should have a couple of months ago. Some people have the fear that these tariffs may be inflationary. After all, you're adding to the cost of the product by putting on a tariff. When you add to the cost of the product, that tends to push prices up. Excuse me. So there will be somewhat of an inflationary impact, but overall, the impact will be negligible, and Trump will offset any impact at all by significantly reducing energy prices. Energy accounts for about 7% of the consumer price index directly, a little more indirectly because it affects the cost of manufacturing. He's going to bring energy prices down, and he says by January he expects gasoline, for instance, to be down in the $2.50 a gallon range, and oil to probably be priced in the $50 a barrel. That will significantly tend to keep inflation down, so that any inflationary impact that we do see from tariffs, which again I believe will be very small, any impact at all will be more than offset by decreasing energy prices. Personally, I expect inflation to be under 2%, maybe by the end of the year or early next year.
What do you make of Fed Chair Jerome Powell not lowering those rates? Meanwhile, we have seen, just for example, the European Union cut rates several times so far.
In my opinion, Jerome Powell is the worst Fed chairman we've had since Arthur Burns in the 70s, and we had that problem. Why do I say that? He's made mistake after mistake. In 2018, for no reason, he raised interest rates. Just as the economy was set to expand because of tax cuts, he raised interest rates. Now, he admitted it was a mistake and lowered it in 2019. From January of 2021 to June of 2022, 18 months, inflation was going up from 1.4% to a peak at 9% in June of 2022. He did absolutely nothing. He kept interest rates near zero, and he kept increasing the money supply through his bond buying program. A major mistake, and that's really why we have this inflationary problem. He's made other mistakes. Finally, he raised interest rates in 2022. He should have kept them going until the Fed funds rate, in my opinion, hit 6%, but he paused the increases in interest rates in July of 2023, and just as inflation was going down, it started to go back up again. And then last fall, he made another mistake. There was no reason to drop interest rates last fall. Inflation from that 9% level was heading down to about 2.4%. If he did nothing, the inflation rate would have continued down. For some reason, he cut interest rates 3 times. In January, inflation shot back up to 2.9%. Now we have inflation pretty much under control. The economy was a little sluggish in the first quarter. It's getting ready to expand. He should cut interest rates. Most economists will tell you if the federal funds rate is in the 3.25%, 3.5% range, that's neutral. Anything above that, you're slowing the economy down. Below that, you're trying to stimulate it. The federal funds rate is 4.3%. It's a full percentage point above neutral, which means he's restricting economic growth at a time when we're trying to expand. In my view, we can't get rid of Jerome Powell fast enough. We're stuck with him until next May, but he has made so many mistakes. As I say, I think he's the worst Fed chair we've had since Arthur Burns in the 70s, who was really the worst.
Fascinating conversation. And of course, it has a major impact, not just on Americans, but around the world. Michael Bustler, thank you so much for joining us today.
Thank you, Veronica. My pleasure. Look forward to doing it again.
This is Ticker. We'll be right back.